Hey folks, welcome to verifiedinvesting.com. My name is Gareth Soloway, Chief Market Strategist here. In today's video, we're going to talk about the S&P, which is rallying today but has just slammed in to a major resistance level. In fact, I'm going to show it to you right now. Let's take a look at the S&P 500. S&P 500 up about 0.75%. But look at this trend line right here. And again, I'm going to put an arrow there because that's how I mark it. When every time we hit that line, I want to make sure we get an arrow on that to showcase how important this trend line is. All right. By the way, if you look closely, you're already pulling back off of it a little bit. Let's see where we end the day. All right. But if I zoom out, look at what we have. This trend line goes all the way back to 2023 October, connects through the low of August 2024. And in this portion, it was kind of a bouncing point, right? It was a place where it could trampoline and bounce back off of. But in the Liberation Day sell-off and the subsequent days that followed to the lows, it broke that line. Now that line, remember, former support, once broken, becomes resistance. And here we are, folks. This is the third time we have tagged the underbelly of this trend line. Once going back to the end of July, we sold off. Once going back to August, mid-August, we sold off. And then here we are again, the third time, tagging that trend line. Let's see what happens. Now, based on past history, which is what technical analysis shows us, it shows us to generally expect a sell-off. The key would be, where would you go? And if we look at this, right, where have we gone each time we've sold off? We've come down to the lower level, this trend line at the base point, right? So again, sells off, comes down here. Sells off here, comes down to the low end of the trend line. So in theory, what we should see is a pullback to that level. That would be around 6,500. If we do that, we start watching to see, does that level hold? One thing to keep in mind here is that when you have an upsloping parallel channel, let me draw it in. So something like this, when you're trading within that parallel, the odds favor with about a 70% chance. And again, 70% is not 100%, right? So it doesn't guarantee anything. But in general, it favors a breakdown with a 70% probability. And so the idea here is very clearly, this is kind of the pattern formation that we have going on. If it does get rejected and attack that lower line, we would in general assume a decent chance of a breakdown on the markets. Now, if we push above this, how high could you go? Well, my theory is this. You'd start to look at your previous pivots and you would see your next level to the upside. This would be my next point of interest. And you might say, well, how do you arrive at that? Well, very clearly, and by the way, let me change this color here so it really stands out. There we go. So the idea here is you take this pivot high. Notice how it perfectly connects through that high here in early July, through this high here in July 31st. And then also right through generally this high here, and it goes up to this. So your next target would be 6640, which would be about a 60-point gain in the S&P. That's if we break above the upsloping trend line there that marks the high end of the parallel. Now, that's not the likely scenario, but as a good trader, as an investor, we always want to look at both sides. So if it pulls back here, that might be the higher probability scenario. But what if the lower probability plays out? We know our next move is about 60 points higher on the S&P 500. Now, if we go back to the charts, and let's get rid of all these little lines here that I kind of was demonstrating and teaching off of, the idea here, folks, is that if we do come down and break down, this would be a major breakdown. And the reason it's a major breakdown is because you've been in this tight range for a long period of time based on market timing, right? So again, you really started back here. And if we extend this out, really we got within this period going back to April, late April, after this dip and reversal back up. And so if you break down, it's usually not just a small breakdown. You'd expect a bigger breakdown. In fact, for me, my downside target would be a revisit of the former all-time high before we broke out to the upside here. So going back to February of 2025, the all-time high was at 61.45. That would be your downside. That would be just under a 10% correction. And again, I think that would be the likely downside target should the S&P eventually break down here. And again, this is very common for charts. Charts tend to when they break all-time highs, they tend to go up for a while and then they retrace to that former all-time high, in this case, the 61.45 level. And that now is solidified as support. A former high pivot, which you break out above, now becomes support on the way back down. All right. So again, just some interesting stuff on that front on the S&P 500. I always try to bring my A game for you guys in these videos to understand what is likely going to happen. I also talk about both sides because you have to always, as a trader, be prepared. But let's be clear. The S&P has hit resistance today. Let's see if it pulls back off of this. If it pulls back, does it break the upsloping trend line that makes up the bottom of the wedge pattern? And if it does, we should correct to 61.45. All right. Thank you so much for tuning in. Remember, Verified Investing and myself, it's all charts, no BS. Charts and probabilities. Leave the hype to social media, the narratives to mainstream media. Right here, folks. It's all about the charts. Thank you so much for tuning in, folks. I'll talk to you all soon. Take care.